Hello everyone, welcome to today's live trading room. It is Thursday, May the 11th, 10 minutes before Wall Street opens at our usual time. I am your host Nikos Zabouras, Senior Market Specialist at FXCM. The Bank of England was today's main event, which hiked rates again just a few hours ago, while yesterday's US CPI data showed an incremental moderation in inflation, with markets thinking it's enough for a Fed pause. And of course, we also had overnight the results by Disney. Before, however, we get into all of that, as always, please read carefully through the risk warnings and the disclaimers, and then we will get started. Once again, please go very carefully for the risk warnings and the disclaimers before we begin. Okay, let's get the ball rolling. We have quite a few things to cover. We'll bring GBP USD right into our screens, and we will talk a little bit about what happens. Now, the pair set new 2023 highs yesterday, an initial mixed reaction to today's Bank of England decisions, but we can see now that it's coming under pressure. So the bank raised rates by 25 basis points in the 12th straight move, remain non-committal to future moves, left the door open to more tightening. Inflation stayed above 10% in March, and elevated wages don't help bringing it down to 2%. The bank does expect a sharp fall of inflation, but slower than before, and it actually raised its CPI forecast, while on the GDP front, the projections were upgraded, not expecting a recession any longer. It does appear to be closer to the end, but there is room for more tightening. Overall, we didn't get much in the way of what the BOE will do next, but there's definitely room for more, even if close to the end, or maybe even there already. There's definitely room for more moves or move. Now, looking at the 4-hour chart now, you can see that it slides today, and there is scope for a test of the EMA, of the 200 period EMA, this black line here at around mid 124s. Although daily closes may need another catalyst, which would then bring, of course, this region here in the daily Ichimoku cloud into the spot light. Above the EMA 200, bulls are in control and have the ability to set new highs, but may struggle to find incentive for much more. Much of the GBP's gains this year have been mostly because markets became optimistic for a less bad economic situation than previously feared, and of course the BOE is tightening, but this may have run its course. And on the other side of the pair, the USD, markets may be over optimistic about the Fed. Now that's it from the GBP USD. We're seeing still a mixed reaction now, slipping to the downside, so we'll need to see where markets stand on today's decision and on the GBP going forward. Let's go back to Euro USD. Now, what we had on Wednesday was CPI inflation from the United States, which ticked down marginally, 4.9% year over year for the headline, while the month over month increased by more seasonal 0.4%. And the core also inched lower at 5.5%. Overall, these were marginal declines, and inflation is still far from the 2% target. The process of bringing it there has a long way to go, according to Chair Powell from his comments last week. Markets seem to think that this is enough. These figures are enough for the Fed to stay on the sideline and not hike rates again, based on the hint it gave us last week. And that has helped, that has weighed on the dollar a little bit, but this is more evident on Wall Street, which we will check in a little bit. Now it slides today and breaches the 200-period EMA, something for which we have talked about in previous sessions as well. And there is scope for a corrections towards this broader region here, starting from around 1.08. Then we have around 1.77, and then we also have the 200 days EMA at around 1.067. So there is many roadblocks that I think both technically and fundamentally can contain a decline. Sustained weakness below this level does not look easy given the policy rate differential. So the euro has not lost the ability to set new highs towards 1.1233, but they're gonna need fresh impetus for that, and it seems to be going away, at least in the near term, such a scenario. Now the thing is that the biggest now any surprise, let's say, in terms of monetary policy is more likely, I think, to boost the dollar, because markets expect more hikes by the ECB, as clearly communicated by the central bank, but they expect a pause and rate hikes from the Fed. And that's always a factor we need to take into account. Now let's switch gears and go to the Nasdaq. It reacted positively. The NAS 100, you can see that it reacted positively to the inflation figures that we talked about and set new 2023 highs, stepping closer to the 13,724 resistance. But markets may be running ahead of themselves. There is still, for me, a risk of breaching the 200-period EMA here around that 1300. This has not gone away, but further losses into the Ichimoku cloud, starting at around 12,700, will need a significant deterioration in sentiment, and markets at this stage don't seem to be easily weighed down. We'll now go to Disney. We have also written about those results, and you can find our written analysis on the FXCM market analysis websites of your respective regions. If there are any questions at this stage, feel free to shoot them in the chat box, or if you want to share your opinion with us. Now, here we have Disney, which is getting punished, was getting punished at pre-market for its subscriber loss. But let's get things from the top. Overnight, after Wall Street close, it reported overall solid results for the 3 months ended in April 2021. You can see it just opened now with around 6% loss. It had another profitable quarter for the parks experience and product segment, but on the ever important streaming front, it lost 3.4 million subscribers. The losses widened for all three of its services. And as we said, that's what drives the stock lower. However, subscriber figures may not be that important for now, but revenue and profits are, and the financial of the direct to consumer business improved, revenue increased, and operating losses narrowed. But again, for more analysis on this, you can find our written content on the FXCM market analysis websites of your respective regions. Now, on the technical outlook, Disney DIS.US had set new 2023 highs after the previous results, which were here this spike that you've seen, because markets had reacted positively to the then announced restructuring and cost-cutting plan. Then dropped, however, below the 200-period EMA amidst other factors as well, which included then prospects for more hike by the Fed and the banking crisis that followed. As such, there is increased risk for sub-90 moves and for new, given this short rebound, limited rebound, for lower lows towards 79.07 in the region that you see here. Now, on the other hand, the firm has what appears to be a solid restructuring plan, and the streaming metrics showed that it has pricing power and has the ability, and as such, that could reflect positively on the stock eventually. And there is, and the stock has the ability to set, to try for new 2023 highs at 118.51, but does not inspire confidence yet for further gains towards the 130 region. And from a technical standpoint, the upside does not look particularly friendly. That's it in regards to Disney. Now, a light calendar ahead. The biggest events are now behind us, but still the UK will be in focus. Industrial production and preliminary Q1 GDP are due tomorrow. The economy had expanded by 0.1% Q-on-Q in the fourth quarter, avoiding a back-to-back contraction. The central bank, as per today's communication, does not expect a recession, but once again, we will need to see those figures as well. That's pretty much it for me for today. Thank you for joining. We will talk again on Tuesday at our usual time, 10 minutes before Wall Street opens. Thank you.